Is it working? Wow, that was a lot easier than I thought it would be. I thought that would at least be like 30 minutes of me fiddle fucking with technology to figure that out. It's literally been so long, I forgot. I forgot how to set up my stream. it's been a minute. Oh, does the algo still like me? Or are we just gonna chill here in silence for the next hour? Let's find out. There we go. What's going on? What is that? Robert? Is that what that's supposed to be? That's some interesting ASCII characters you got going on. ZZZ, what up, my guy? How you doing? Ay, 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 ay. Cumulus Cloud, what up, dude? What was your old name? I know you changed that. Where's the floof? As in the cat? Do I dare try to play music? I say we dare to play music. Oh, he's chilling. He's sleeping right now. And then his brother's somewhere. Oh, goodbye monetization. Where we at? Where we at? Jeez, you guys haven't heard my playlist in a long time.
Now this is appropriate.
We found some bangers.
We're gonna do a song that I wrote with a guy.
God, I'm not gonna get slapped for. No, they'll just remove monetization. Oh, Abby, what up? Good to see you. Good to see you. File is bigger than 2 megabytes. That's... Dude, I can't find my lover. We'll use the OG. We're using the OG thing today. Oh, you can't see. You guys can't even see. Here we go. We got the OG going. Oh, how are we doing? I hope you own BBBYQ. No, I don't. I've kind of grown past the whole meme thing, to be honest. Which is kind of something I wanted to talk about. I don't know. It's an odd situation. Like part of why I haven't deleted any of my old videos. That was too heavy. Nope, we're not doing that. Okay, we'll do UFO. That's cool. Part of why I haven't deleted any of my old videos, while a lot of people seem to be like cleaning house, is you can see the growth of like what the channel has been, and over time what it has become. And albeit there have been some gaps, but all in all, it's a really interesting story and track record to see unfold. And so going from the addied out of his mind, rock and roll, neurotic, whatever, 21-year-old kid, you know, still rock and roll over here, still high energy, but went from like stalking the 1 minute chart and even going down to like the 1 second chart to building fintech. You know, like that was the last thing that I thought I would be doing, at least at that point in time. And so everybody else, though, I think it just kind of goes to show how much they were trying to harvest and like farm the hysteria at the time, and the people that really wanted to learn, I think, gravitated towards my channel. And I don't know, it was frustrating dealing with people not wanting to listen to data and not wanting to listen to how things truly work, and instead kind of flock to the. Turn the music down a bit. Thank you. we're still amateur hour. That should be better. Thank you. But Jesus, 25 viewers, not bad, lads, not bad. But yeah, all in all, it was pretty frustrating, just kind of dealing with trying to be the voice of reason in the room, but also being the, you know, the standout character who is very questionable. What's funny though is that even like rock and roll persona, forget the rock and roll stuff, forget the craziness, forget the just all the wild stuff that we did. And this channel was still the most informative. This channel was still the most educating. This channel was still the truest to learning. Proper analysis, yeah. Yeah, thank you, Edward. The amphetamine salts were coming through the computer screen in the early days. Yeah, that was a really weird time in my life, and I still, like, I don't regret it. The only thing I regret is that I wasn't even more sturdy with my message for educating. And so at the same time, it has to be accepted that even if that sturdiness was there, it wouldn't have lasted relative to the demand for like copium and whatnot. Still holding any? No. As I've always said, like I can still remember saying it. If buy and hold is your strategy, great. I've always kind of been like an options guy. And I was never, I mean, there have been psychology studies done about this kind of stuff. Like, I'm still convinced this whole entire meme stock thing was a psyop. But there have been psychology studies done of how groups of people respond to, what was it? It wasn't a prison experiment. God, the psychology experiments in the 60s and the 50s, those were peak. That was the peak of psychology, dude. We did some really awesome stuff back then. There's one kind of like axiom kinda or simulation they did where 5 people were arrested, and they were each individually told, if you tell us what the crime was, we'll only give you 10 years. But if none of you confess, then you all get off scot-free. If someone else confesses, you'll get 50 years. And so put simply, it was rat everybody out, you only get 10 years, you get the best deal out of everybody. If no one says anything, you all go free. And if you aren't the one that confesses and someone cracks, well, you're boned. And everybody ended up just confessing. And so it's the same thing with this holding thing. People thinking that if everybody just holds, it'll skyrocket and go to infinity. Bye bye meme stocks. Good to see you grow far away from all that options. Yeah, exactly. 100%. 100%. It was good times. Gotta say, we'll never forget what your desk looked like. Oh yeah, this desk is still kind of messy, but I've been working on the hygiene and cleanliness. Definitely wild and fun, that is for sure. Are all options from NYSE NASDAQ written sold by Citadel and Virtue? Do you think this is fundamental issue? I'm at the point where I don't think there's really any manipulation anymore. I think we have to resolve to Occam's razor, and my version of that would be there was naked short selling on GameStop at one point. When the buy button was turned off, a majority of those naked shorts were bought back. Transactions always have two sides. There's a buyer and there's a seller. If retail can only sell, who's the buyer? And why are they buying? I still can think back to those days, and I proposed that idea, and nobody... Either I wasn't loud enough, or people just didn't like the idea. Yeah, the sleep stream, that was funny, man. And what's interesting about that too is that was like a gaming kind of thing, that like gaming streamers would do that. And it wasn't for money. It was just fun to see like how people would interact with everything. Like someone was trying to play some obnoxious song, and then another person tried donating so that the voice thing would call my local police department. That was a really interesting one. Trying to get Alexa to basically swap myself. Oh man, I still refuse to have some boomer tell me I can't go to a movie theater about a video game. Yeah, that's fair. The sad part is that I think there were opportunities for these things to squeeze, and like we always said, if you're going to focus on personal matters and wacky theories and virtue signaling, and then the whole entire opportunity is going to vanish because you're too caught up with problems that don't mean anything. You know, AMC got sold out. Adam Aaron gave shorts to cover at only 67 cents a share. Just unbelievable. Like, I made a video. I should have been so much louder about this. This was recent. Like, the past 6 months, every one of these pink bubbles should not exist. In fact, let's go ahead and pull up what a normal stock looks like. And when we go back to here, thanks to our state-of-the-art server infrastructure, we have to wait 30 seconds. It's so pretty. We don't see any pink bubbles. No pink bubbles being fails, but no pink bubbles. Let's go back to the past 1 year. Ever since Ape's incarnation up to, okay, the amount of fails that AMC had going into the conversion had the whatchamacallit, had the conversion not gone through, and everybody who was arbitraging AMC and Ape, short AMC, long Ape, the thing could have squeezed easily to $100. No meme, not joking. Easily. It ran 100% on the news that the proposal was being stalled. And dude, like, I called this. This right here. This was on July 18th. Let's zoom in real quick. July 18th. AMC has its biggest OPEX to date taking place in the put side of its chain. Hundreds of thousands of at, near, and in-the-money puts are going to expire this week. Could easily see this thing move very quickly going into the end of the week. Wouldn't be surprised if lawsuit headlines take place at the same time. So this was July 18th. Okay, let's go to AMC. I'm so tired of this stupid stock. This is so stupid. This was July 18th. It was a Friday. Right after market close. News comes out. I can't remember the exact headline. In layman's terms, the proposal for the reverse split was now put into question. Anyone, not even retail, forget retail, institutions as a whole who've been shorting AMC and longing Ape and playing that arbitrage until they both meet value, we're getting squeezed. There were a few players that bit the bullet and covered. And so this thing ran over 100%. That's a wick up there. Like, this is a wick. This was within 10 minutes of itself. Went 100% off that news. Had that actually happened, where the reverse split was canceled, or the judge didn't allow it to happen, easily could have been $100. Pre-split. Easily. Thing had like 50% SI. The fails on this thing, like each of the bubbles that you see here in this video are representative not of just total FTDs, but total FTDs of total volume. And so some of these days volume were 80% fails. 80% fails. The thing would have gone crazy. So, anywho, instead of that happening, everybody's shorts were closed out at 67 cents a share, which, if you're a short, honestly, round of applause. That's at least a 90% gain, no matter what point of the chart you opened up. Like, there were so many opportunities for this thing to actually run, and every time that slimy rat bastard of a CEO comes out and says, well, it's we believe that our path forward is meant for a reverse split with our beloved retail investor community, that we're shafting, that we should have this opportunity. And every time there was a letter, and he's trying to stroke retail's hair, like everything's fine, you're our ape, you own this company. Meanwhile, they're selling 80% of the voting rights to the upcoming vote to a equity management partner, and then holding a vote, and then like even speaking as if retail's vote matters. Just I mean, the day this happened, on the earnings call where they announced it, what was the exact line? It was, I knew right away just by how he was saying AMC preferred equity. That's all he had to say. He repeated it 4 times. It was the cringiest thing I had ever heard on an earnings call. And I'm like, yeah, this is going to be a load of shit, isn't it? And then right when he's explaining it, and then the CFO comes on and explains it, I called it right there. I was the first one to say it. This is backdoor dilution. This is backdoor dilution. Just a tragedy, dude. Just a tragedy. I'm ashamed my name ever had anything to do with this thing. I wish I went bearish sooner. I wish I was a louder bear. Hey, Bayou, what's going on, man? Crazy All-Star, my man. Sorry, I'm just not reading. Are you still in contact with Trace Trades? No. Just hopped in. Thoughts on current FTDs? Meaningless. Doesn't matter. They all got closed out. That was the plan. I said it in a tweet somewhere. I'd have to go and look for it, but that was the plan. They knew that they could just mindlessly sell AMC short without locates, assuming that reverse split went through. Had it not gone through, dude, it was like, see, I can't even, get how stupid this is, okay? Listen, if we go to AMC's page and we look at the dark pool stuff, AMC's dark pool data I have it set to 6 months, so we can see basically like the biggest levels of dark pool activity on this thing when it decides to stop throwing a fit. AMC's fails are so egregious that it literally is off the charts. It messes up our software because it's scaling for 821%. Unreal. So what really happened to OnlyFlow's team? I unsubscribed because the weirdness of it. Supposed to resubscribe to get notification. Oh yeah, absolutely. So put simply, it came to my attention that a particular party funding OnlyFlow's operations was using money that was not theirs, and you can kind of see where that becomes a problem. And then during the discovery process of that and how we were going to handle it, everything became really hairy for everybody else because people were realizing that this was a project that had a great idea, a great developer, a great owner, but the parties that were invited to join it did not have the integrity for it. And so if you look at the way that news came to light, it was a really dodgy attempt at character assassination with no evidence, nothing. For me to address it back then would have just added fuel to the fire, and a lot of people from that general vicinity just look for stuff to get mad at. And so it's not worth the brand's name and the brand's reputation to get down with that. And so instead of addressing it and trying to play defense, my offense has just been building this. And this is literally I am so proud of this. This is the culmination of everything in my life thus far. I mean, I started coding when I was 12, dropping out of high school to pursue a full-time career in tech, eventually becoming CTO of a handful of startups, getting into the markets, learning about markets. You know, I've been in the markets for 2 years and then managed to start this channel, and from messages I've gotten, people have learned a lot from me, and they've had their own successes because of some of the things that I've said. And then building OnlyFlows. You know, there's a lot of love that's been put into this, and a lot of time, and a lot of scar tissue. And when that happened, you know, there was a lot of backstabbing that took place. just from the get-go to find out that the legs that this thing is on are not genuine. And so to me, it just wasn't even worth trying to argue. When you acknowledge stuff that is just that egregiously false, it's just not worth it. It's just not worth it. And so the best response is to continue building a product and an experience that tells the user what OnlyFlows is and tells the user what OnlyFlow stands for. If this was what that disgustingly untruthful post was, which is pure defamation, by the way. I mean, you can't get a purer explanation. You can't get a purer example of something defamatory than that. Window licker. Thank you, sir. You didn't have to do that. Thank you. That means a lot. So when that was posted, it just proved even more just how incompetent that member and potentially members were to make those claims, and then to have the role that you claimed to have had you been compliant and true to your self-proclaimed role. Those issues that you claimed that are lies wouldn't have been issues, because if you were doing your job, you would have found them. So ultimately, it wasn't worth it. And it was actually, I'm glad it happened like that in retrospect, because it gave me the time and the focus to really hone in on this and take it all the way. So I have to give those gentlemen a thank you. You and Bigum still homies? No, he's a different POV. Yeah, I mean, we don't really talk that much anymore. I still love the guy, even if we see things from two completely different perspectives. I have nothing but love for him. He was like the first person that I was able to really jive with, and he was teaching me things before I had even an iota of popularity. So he's always just kind of been like a day one for me, and all I hope is that what he's telling people and what he's sharing is truthful, and I think he does a good job at that. Came in here just for this hot bag.
Thank you for the explanation, Astro. I'll be returning. It was just very surprising at the time.
It is a word. Obedient or attentive.
Obsequious.
Thank you for teaching me a new word. I do appreciate that. Sycophant of an insult. Fuck you, Sam, and bye on. Thank you, West Palm Dan. Appreciate you. Thank you for the explanation, Astro. I'll be returning it just here. Yeah, thank you, man. I wish that I did publicly address that. Like, Jesus Christ. How's that to wake you up? I wish that I addressed it sooner, but like I said, it's not worth it. Not like that. You can use words, but I can use actions. And as they say, actions speak louder than words. So the fractals was all baloney? No. And again, this is where I think the lines were blurred for people. Part of it was an error on my part, because I was still so new to everything that I was a huge victim of the Dunning-Kruger effect. Again, we took a very scientific approach to all of this, even being brand new to it. We were okay with being wrong. We were open about our mistakes. And we were the fastest to take those mistakes and apply them as learning. And so the fractals were not baloney. The fractals were, initially used for my prediction in June 1st, I think, that I said, like, the squeeze is actually going to happen. And I don't claim that to be some prophetic thing, but that used the fractal approach. And all the fractal thing is just you have these repeating patterns, and if you see them getting bigger, that implies that you're going to have a bigger instance of it after that replication. And if they're getting smaller and smaller, that means that you're going to have a reversion take place. And I failed to explain that. Another thing that I have tried to get better at, I cringe at myself now anytime I do this. Big words, way too long of explanations, and just it's like I just read a thesaurus. If you think of that me from that time, I wasn't being that way to one-up anyone, and I wasn't being that way to impress anybody. These concepts were just so new to me and so foreign to me that I had to use bigger language for it. And that's just because when you don't truly understand something, you often explain it in a really complicated way. That's why when you talk to people who actually know what they're talking about, they can describe really complex ideas to children. I think it was Einstein who said that you don't truly know something unless you can explain it to a child. And that's exactly what that was. So, I had nobody to impress. I wasn't trying to impress anybody. If I was trying to impress people, I would have had a clean apartment. I would have had a more kosher, approach to being a public figure. Oh, it's all good, man. We were all in it trying to make the best of it. Yeah. And I think, honestly, the amount that has been learned in all of this, me personally, the losses were a pretty cheap tuition. And that amount of money I could have taken and gotten an actual tuition at a pretty nice university. But I wouldn't have wanted it that way. I would do it again. Sorry for my ignorance. What is OnlyFlow? Yeah, so OnlyFlows is kind of an evolution to all of that. This is an all-in-one platform for options data, dark pool data. We have artificial intelligence that we're using to generate trade signals. But put simply, it's a data platform that also doubles as a social media service. And so you can share your trades. You can post on our own little Twitter. I'm trying to come up with a better name for it. But it's this all-in-one platform that changes how you look at markets, and I think is going to be a new standard, especially with the stuff that we're coming up with for things that make you a better trader. We are the one platform that does that. And some of those things are in the back pocket right now. They're the ace up the sleeve, so to speak. But it's really cool. It's really cool. Like if you go to my profile, here's me. You can see my posts. You can see my trades, right? You can see my performance. So I've had 10 winning trades and 1 losing trade. My average win is 81%. Average loss is 8%. We took it a step further, and by we, I mean me. And if you click over here on stats, you can see what my best trade is, my worst trade, what my best ticker is, my worst ticker, and then some additional stat breakdowns. And then we have I think this is, yeah, I gotta fix this. We have a leaderboard for trades. Just some really awesome stuff. And then the trade signals, for example, as a data element here. Oh yeah, definitely getting MW3. Thank you for the donos, by the way, Mr. Edward and Window Liquor. So here's some of the trade signals that we have. And what's really cool about ours is that we actually do automated back testing. So I can go back to, we'll start on September 7th and pull 1,000 of these all out of the money, and we'll make these sweep orders only. VXX, talking about the VIX. So here we have our AI trade signals with back tests. Now, obviously, not all of these are profitable. Some of these are hedges. Some of these are just general noise in the market. But if you scroll, you know, we've got this QQQ order that came in. And like, this is just, it's dead simple. QQQ, and the learning curve here is you just need to know what to look for. And so me and a good friend of mine are really hard at work right now coming up with guide videos and documentation that tell you what you should be looking for, or at least saying like, hey, you know, if you're looking through binoculars, you're going to be wanting to look at things that are far off in the distance. And if you're using a microscope as a tool, you shouldn't be looking out in the distance with it. You should be looking very close with it. So that kind of approach. But if you have a little bit of options experience, you'll know that anytime you see a sweep order and you see that the size of the order is greater than the open interest, and in this case, we only have 6 days to expiration on the position. So this trade is only good for 6 days. 10,000 contracts, $200,000 in premium. This thing's probably going to go in that direction. And so, like magic, after 3 days, it goes up 126%. And then you can also, like, whoops, that is not what I wanted to search for. You can go to a dedicated page for whatever stock you wish. Sorry, picking a song real quick. And so here's Tesla, for example. And so you can filter, obviously, for particular data fields. So maybe we want out of the money only, 50,000 or more in premium. Yeah, that should do it. And then I'm going to set this to, I think this is the emoji set that I want. Appreciate it. Followed you back then because I always felt you were looking at it in a very different way. Yeah, thank you. Thank you. If you have any more questions, always feel free to ask. It's a culmination of a little bit of everything. Like, I've spent more money on market software than anyone else who isn't, you know, a fund manager. And so I've used TradyTix, I've used Unusual Whales, I've used Quant Data, I've used Squeeze Metrics, I've used Cheddarflow, I've used Swaggy Stocks, I've used Stock Grid, I've used, like, you name it. Like, I've had a subscription for one of them all for multiple months at a time. And they all had, you know, a lot of cool stuff, but there's always something missing. There was always something missing, and it was frustrating as the end user, where it's like, man, I wish you had this one feature that TradyTix has, but TradyTix is $100 a month, and this is $30. So, but if I go to TradyTix, then I'm missing, you know, the one feature that you guys have, and I just got tired of that. And there's always, you know, certain features and certain design things that just never made sense to me and always pissed me off. So I was like, just gonna make my own. So here's Tesla, filtered for trades that have at least $50,000 in premium that are all, you know, set it to 5% out of the money. And so at close on Friday, someone bought 470 strike calls. This was a $70,000 order, above the ask. Size is greater than open interest. What's really cool though is that you can go and see exactly what the volume on that contract has been, because you can see this one order. Like, this obviously sticks out, but what's really going on with it. And so if we go to the past 3 months of activity on it, there's been a lot of selling to it. If we go to the past week, more selling than buying, but the open interest is going up. So it could be just someone playing volatility, or it could be part of a spread. But the sweeps are what tell the true story. Excuse me. We got 300 strike orders, calls on Tesla. Came in for about a 6-month, 7-month expiration. These look really aggressive. If we click into these, yeah, more buying than selling. If we go to the past 1 month, I saw some selling back here. That looked like profit taking though. And then the past 6 months. Yeah, someone loaded up back here on August 21st, and then the price is in white. The price of the contract, and then you see the price of the contract go up. So really, really cool stuff that, that's just the simple stuff. And then down here, we can see the most active contracts broken down by the amount of trades, the total premium, the volume, and then by the Greeks of Delta, Gamma, and Vega. And then, of course, we can click into those and see what those are about. Some dark pool data. This page I'm cleaning up and adding a bunch of stuff to, so be patient with that. We have a chain analysis. This is really cool. So I can basically take of all the expirations, right? Every expiration tells a different story. And often you'll see volatility being targeted or like loaded into a particular expiration, and typically those expirations are for earnings or OPEX cycles. And so I can basically take the call input volume, open interest, sold volume, bought volume. In this case, I'll do bought volume. And then I'll compare that to the implied volatility. So implied volatility is in white, and then the call input volume is in blue and red. If you see the IV dip, just ignore that. I'm actually going to do open interest. So we can see this big open interest spike for calls for the January 19th of 2024 expiration. And then same thing for the September 15th expiration. And then we're comparing that to implied volatility. So if you have OI leaning towards the call side with IV up, that typically means that anticipation of upside is to be expected, and then vice versa for downwards. By the way, I'm $103,000 in the red on the AMC. I wish I knew what to tell you. And I used to feel responsible for reading stuff like that, and sometimes still feel it a little bit. But going on a year ago, probably sooner, ever since that earnings call about Ape, I said this is it. This is done. Everything after that was just, we were going to play it for technicals. Yo, Nate, what up, my guy? Nobody's fault but mine. At the end of the day, it is your money. You're the guy who pulls the trigger. On the same token, though, I think I was the only channel that really said, hey, we think this is going to happen. So a big squeeze. We think that there's corruption, so make it short selling, all that stuff. But we also said we don't know this for a fact. And based on what we know right now, things seem to be looking towards that direction. But we did not blindly follow that. And we questioned everything, and we considered everything. I was the only guy who did that without worrying about what the community thought. The only thing that was my Achilles heel was how naive and new I was to markets. That's where I messed up. Okay, let's actually get to whatchamacallit. Let's do some trade planning. Let's go to, I don't know what we want to do here. We'll do hot zone first. That'll be a good start. Okay, so anyone that's not familiar, hot zone is just like, let's see, well that's a bit more. Let's get it ornery. So if we go to like Tesla, for example, and we scroll down, we see all of the most active contracts. Once it decides to, there we go. So like these are all the most active contracts. That's exactly what we're doing with Hot Zone, but we're able to like customize what we're looking for to group things together. So for example, I can move this. I like to group by sweeps. So we're only going to show a group of trades that only if they're sweeps do they get grouped together and added to this catalog. Trades that have at least 25,000 in premium, and we're going to only do trades from. We'll do not last Monday, but the Friday before that. Because to me, if I were an institution, I would be repositioning with the witching event that took place, before everybody else. I'll try to beat everybody to it. Obviously no end date. Minimum size I just set to 1. And then we'll do trades that are 60 days to expiration or less. Out of the money and sweeps, and we're gonna click apply here. Let's see what we see. Blink, I really think Blink might do something. Take your time, not like there's people watching. Did I break something? I'll try this again. And then while that's doing that, we're going to use sonar and trade signals to get some ideas. So sonar is really cool because you wish that you could find the right trade at the right time. Hi, what up, Louisa? And finding the trade at the right time is always difficult. Just finding the right trade in general is difficult, but to find it at the right time is just another layer of complexity. And so I think an element to finding the right trade at the right time is by finding the right pattern. So with sonar, we can scan for stocks that are in a triple top, double bottom, head and shoulders, near death cross, near golden cross. That's a really cool one. So I can just click apply filters here. Actually, I have to set a date. Do Friday. And so now here's all of the stocks with any of the patterns that I just put in. JP Morgan showing a double top on the hourly. AT&T double top. Marina double top. So let's check out JPM real quick. Hey Bronco, what up, man? So we're saying a double top in the 1 hour. Dude. Fucking cats. It was either a cat hair or a pube, I don't know. Okay, double top in the 1 hour. We're gonna go to regular trading hours. Yeah, so double top right here. Looks like it's already playing into the move. But these last 3 hourly candles look really bearish. But we did see a lot of buying coming in. Yeah, cat pube. And then on the 4 hour, it looks like it's testing a new range. The 4 hour candle doesn't look great. And the daily, that could go either way. It's a lot of volume though. That's too hot to hold, so I'm going to remain agnostic to that. That looks really bearish. That looks really bearish. I don't like these pennants. I never like these pennants. These things always look icky to me. I mean, on the weekly, that looks like it could break out, because that's kind of a bull flag on the weekly. The monthly potentially looks strong, but still not enough volume. We're halfway into the month, and we're only at a third of the volume of the previous month. So I'm not really too big of a fan of that. I'm not sure how much more range it has, or how much more room it has to go low. I mean, maybe 64, but another retest to 103 maybe. So let's do this instead. So obviously I could continue digging through this and then find something to work with, but another route that I like to take is using signals. And 25,000 minimum, sweeps only, out of the money, and we'll send it. And let's see. I don't think this is loaded. I broke something with this. What did I do? We'll just keep it to out of the money. What happened to the tunes? There we go. And then, of course, I'm going to plug this real quick. OnlyFlows.app. You can get access to this. Everything you've just seen, $4.99 a month. Less than a Netflix subscription. Cheaper than your favorite OnlyFans model. Words. It's awesome. It's really cool. And I'm adding stuff to it every day. Literally every day. If you have an idea, I listen, I add it, I make it. If you find something that's wrong, I fix it. It's a really cool relationship. Normally it costs a lot of money to find somebody who can do that kind of thing. So, join today. OnlyFlows.app. Get in here. It's the best. What did I do wrong? Okay. Signal-wise, though, CHPT. That looks interesting. That's a $6 call. Way out of the money. Could be a hedge. I mean, that's technically like a triple bottom, quadruple bottom almost. Okay, I'll bite. I'll bite. Somewhere over the rainbow. Oxycall. Oh, that's nutty. That's nutty. 20 days to expiration. Let's see what that's about. That's a lot of volume. What the hell happened? I'm gonna go bullish on that. I like that. I like that. Oh, and then I can have the OnlyFlows plug. Oh my god. Oh my god. It all makes sense. I gotta make a banner for this because this looks so disgustingly unprofessional.
I think this is a song of hope.
Oh, okay. Oh, that looks terrible. Fuck it, we ball. Okay, I like Oxy. QQQ. Good lord. 1,500 contracts, 34 days to expiration, 710,000 premium. We'll take it. I like that. And if you watch the market recap from Thursday, you'll know that we're actually bullish going into this week. This one's loading up on AI puts. I can see it happening. Maybe, I wonder what Nvidia looks like. Nvidia does not look good, but everybody keeps chasing it and then getting stopped out. I'll bite on the AI puts. You stop simping for one girl on Fansly every month for $49.99, and boom, now you're the trading champ for the same price. Make the switch chat like somebody can buy the dip. Yo. Bronco. You know.
There's a songbird who sings. Sometimes all of our thoughts are misgiven, and I think you can see that.
Bronco, you know, if I didn't learn my lesson about taking the people I care for and trying to put them into a business, I would totally try to take you up again and convince you to become our marketing director. But thank you for your contribution. Where did... Oh, a good friend of mine appears to be bullish on Nvidia. I guess you do have a fair value gap taking place right here, so maybe like a retouch down to that wick at 435. The other thing too, like I'm gonna get rid of some of these indicators real quick. I talked about this in the video last week about moving averages. There are two universal indicators that I consider to be a thing, and that is moving averages and VWAP. VWAP is number one. VWAP is always respected. There's no way that you can mess it up. VWAP is a universal language, and it's purely mathematic. There's no way that you can just come up with some arbitrary lucky number. The moving averages you can, though, and a lot of people come up with their lucky number where they think that the 38 EMA is just always going to work. People think that the what's the other quasi-special one? I don't know. Everybody has their own. I mean, I still have mine. But ultimately, the only reason why certain indicators have certain meaning in markets, and the reason why you see things react to those values the way they do, is because everybody else is using them. And so when you have some exotic 921, 1348, 921's not too bad. And if you actually think about it, the 9 is you're actually just taking a quantile of a common moving average. In this case, like the 50, and then to keep it proportionate, I think you're 11, right? So 21 is roughly a third of 50, and then your 9 is roughly a third of 21, I think is a common one. So you're taking it in thirds of what most people are playing by, which you can use as a leading kind of approach. But ultimately, you want to stick to your 200, your 50, and then maybe a 9. Maybe a 9. 20 is not too bad. But to kind of like condense this and keep it simple. We're going to take, I'm going to scrap this real quick. These things are really cool. You can't even see it. So these blue lines do have some meaning to them. These blue lines are anchored VWAPs. Now this is where I guess you could get kind of hippy-dippy with how you approach VWAPs. Yo, Tommy, what up, dude? Is that a Morgan Freeman endorsement? Yeah, that'd be great. That would be awesome. That's a great idea. Nvidia's like the pretty mean girl cheerleader from high school. True. True. And she's always dating the other guy. And then right when you think you get some action, it turns out she has herpes. So to the point of the friend of mine, I am of the conviction that everybody keeps finding themselves on the other side of Nvidia. And I have data to back this. I need to have the time to actually do a little write-up for it. It'll actually be really good for the OnlyFlows brand. What ends up happening is that oh, this is cool. What ends up happening is people load up into Nvidia puts, and then through the process of how market makers and dealers position themselves, right? When I buy a put, that dealer is now short. And when you're short delta and you're short gamma for a put, well, at the initiation of transaction, they actually short sell that delta times 100 as shares. So if I buy a negative 0.2 delta put, they're going to take that value. Negative 0.2 times 100 is 20. So they're going to short sell 20 shares to remain delta neutral. But when that thing starts to lose value, because as you get further away from the money, your underlying Greeks, in this case delta, are going to decay. And when that happens, as price begins to leave that area, that proximity of where delta has its value, especially those like sub 20 deltas, to remain delta neutral, and more importantly gamma neutral, which is where Nvidia really takes the cake here, is the volatility. Instead of selling those shares short, they're actually going to buy those shares back. So if the delta decreases, let's say that delta goes from negative 0.2 to negative 0.1, they're actually going to buy 10 shares back. So they're still neutral to that position that they dealt to whoever was buying. And the same thing happens for calls. If you buy a call, that dealer is actually going to go and buy, in this case, 0.2 times 120 shares. And then as it approaches into the money, God damn it, every time someone donate $1,000 so I can get some office chair I don't need. I should definitely fix that. In the case of calls, they'll buy 20 shares to hedge. As that call contract approaches the money, they're going to buy more shares. But if that call contract actually decays, if the delta goes down, meaning the price of the underlying goes down, if that call contract cuts to 0.1 delta, they're actually going to sell 10 shares. And so now you can kind of understand how moves kind of become reinforced, almost kind of like a knee-jerk, self-fulfilling reaction. And that's what Nvidia keeps doing, is people are loading up on puts, and I'm about to show you. People are loading up on puts all the time because it should go down. It should. But when people keep pricing in this move, I've said this forever. Markets don't crash. Markets can't crash if everybody's hedged. Markets crash because no one is hedged. If everybody's hedged, it's gonna be taken lightly. It doesn't matter. Markets crash when no one is prepared for it. And so this is one of my favorite features. This is called Flux. This is an OnlyFlows exclusive. And so we have three primary visuals we have going on here. Up here, we have an RSI. Down here, we have some values that I'll explain in a second. And then down here, we have some momentum, momentum oscillator. And this is really, really cool. What we're doing is we're taking the premiums for the purchasing and selling of puts and the premium for the purchasing and selling of calls, right? Now, plenty of people already do this. It's nothing fancy. What I like to do is take a little proprietary formula of ours called volume-weighted theta. And so with volume-weighted theta, we can actually see which side is buying the most theta-occupied positions. And so when you see like heavy call buyers or heavy out-of-the-money put buyers, based on the amount of theta that they have, the effect of that position is the opposite. So if you have a bunch of theta on calls, that's actually going to be a bearish thing because those positional values are less. Theta is eating away at those deltas, which means that because the market maker bought 20 shares of, let's say, a call to hedge, if the theta is 0.1, well, now the next day, all the market maker has to do is just sell half of that position to remain delta neutral. And of course, as you approach expiration, that theta ramps up. And so we can see that put buyers are actually buying a relatively less amount of theta. Call buyers are loading it up, right? We're gonna go back a little bit more in time. We'll go to August 1st. I'm in the middle of overhauling this, so it might have some long load times and some bugs, visual bugs. Okay, so the hot zone report came in finally. Let's see. So the most order out of premiums, right? We're looking at $25,000 or more, and I'll get back to the Nvidia thing in a second. SPX 4000 calls saw the most activity, $1 billion. $1 billion since September 8th, which was not this last Friday, but the one before that. 24,000 in volume, 78 trades. That open interest is going up. I wonder if that's like JPM collar related. I'm actually not so interested in SPX right now. I want to see these Apple puts. So as far as equities go, Apple puts the 195 put, or sorry, 190 put for actually this OPEX. I wonder if they rolled anything here. Okay, it looks like they were buying them back. Because you can see that open interest decreasing with it, which is in yellow. So somebody was short these 190 puts. I need to see the out of the money. Okay. Jesus. Okay, if this wasn't your signal for going long on Nvidia, I don't know what to tell you. So we're still looking at volume-weighted theta here. And you can see calls just go through the roof. That's a... What did that even go up to? And you can see that the theta on the put side was being sold. Now again, so the green line in the middle is showing calls, right? We're measuring the theta, the collective theta, volume-weighted theta. So if the call contract is purchased, you'll see theta go up. You'll see that line go up. If we're doing premium, for example, you'll see this line go up. If calls are being sold, you would see this go down. So in the case of these puts, when you see these theta values going negative, that means that you're seeing the put side of theta being sold. And there's no better way to play volatility and to be a vol dealer than to sell theta or to sell Vega, which we'll check in a second. Now here's where the fun one comes in. This is volume-weighted gamma. Yo, thank you, Abby. Thanks for stopping by. So use Whitecaps Night indicator every day for trading. Dude, I don't know how I came up with that. I think, I was thinking about it today. I really was it's just a dynamic volatility indicator is what it is, just with my little special sauce thrown on top of it. I look back at the code and I don't even know what I was writing. What the hell am I doing wrong here? 100,000. Okay. Interesting. I'm not sure what to think of this. So the gamma customers were long gamma in this case. I'm sorry, dealers were long gamma. No, short gamma on the put side. So somebody dumped a bunch of gamma, essentially, on the call side. Huh. Let's just do this. Let's go to the daily. And we'll go all the way back to July. That was August 1st to the present. Okay, so here's the visuals on this need to be overhauled, but at least it's simple. So this is called options map. I just kind of came up with the name kind of on a whim. And this shows purchased gamma for calls and puts, and you can see that calls are overtaking Nvidia by storm. This goes back to May 22nd. The price is in white. And you can see even going into this drop off, calls were being bought, which based off of this, where we see a bunch of calls being dumped, and now someone is really short gamma. This could be them trying to buy those back. And then if we look at the at the money only, this is a cool one. No one else does this. See, I'm crazy, but I think outside the box. So now we're going to be tracking at the money only transactions. So anything 1%, plus or minus 1%, to be considered at the money. And this is on the purchasing side. At the money puts were being bought up here, and then at this bottom, at about 410, 408 maybe. Looks like they were getting squeezed out of it. And the same thing took place back here on July 14th. And then at the money calls were being bought back in a really kind of consistent pattern right here on the way down. But yeah, you can see the at the money puts really being bought at this bottom, and that's where everybody was like, it's got to be over. You can even see going into what is this, August 16th, you know, after peaking at 480, we're now sitting at 440. You can see the herd mentality kicking in. People think, okay, it's got to be time. It's got to be time for this thing to fall. It's got to be time for this thing to come back to reality. And the thing goes from 430 up to 500. So about a 18 to 20% gain right there. So you can see puts getting squeezed out of their positions. Not literally, but in the sense that by... Music. Is the audio still good? Is the audio still good? Okay, I think we're good. Can you guys still hear me? Okay. This looks way cleaner. Yo, thank you, man. Yeah, you were around during the the four menu item days. There were literally only 4 menu items here. But you can see that right when everybody was like, okay, it's got to be over. It's time for things to come back down. Everybody loaded up. I mean, you literally saw an all-time high for put activity taking place right here for gamma. Everybody tries to catch the top, and that's when dealers are, you know, peak net short as far as dealing puts is concerned. And so that move up is exacerbated by dealers remaining delta neutral, which in this case is buying back the stock that they sold short based on the delta of the contract that they were selling to the customer. And then even so everybody loaded up, and then by doing that, when the move up took place, dealers are just reinforcing that up. It's like trying to keep a like a basketball underwater, and dealers are only adding to it. Ironically, when the move actually took place, put buying was at an all-time low. And then we can check the size of the at-the-money call and put orders. So look at this. This is the size, collective size of all of the call and put orders. Calls in blue, puts in red, with price in white. And you can see that back here, 66,000 puts were bought at the money. We're filtering by at the money. And these are all purchased. And the thing just kept pushing up. And then going into this double bottom right here, tons of put purchasing. Tons of puts being bought up. And then the thing just goes from 408 up to 500. I mean, that's plain as day. You're watching dealers push this thing up. And then if we check the sold, yeah, put buys at equal in business. You see them closing their puts with it. These are now sold at the money. You can see people capitulating. Right there, plain and simple, easy as day. That's how you read a manic stock. So people were buying puts out the wazoo in this range over here. Okay, YouTube is biting me in the ass. They will not let me play any music. So we saw the clustering of put purchasing taking place in this range. And so now we're looking at sold, and these are at the money, which means that the strike of these are within a 1% range of the underlying. And you see that they're selling them on the move up. This is real-time capitulation. And then I'll do a little demo real quick. I think this will be cool. Let's pick the most manic day for Nvidia. When was this? Okay, so this was August 14th. All right. By the way, OnlyFlows has been developed only on a laptop. It has all been on a laptop. I'll show you guys something really cool. August 14th. So we're gonna replay August 14th on Nvidia. And we're gonna watch in real time. Well, real time in a replay. How that day came to be. In 1 second. Woz and Jobs had a garage. You have a folding computer. Yeah. I've just been binging Steve Jobs interviews in the background while I've been making this. It's been really cathartic, actually. Because that's when I was a kid, I like studied his keynotes. I'd watch and listen to how he spoke and presented things. You might say that he was my hero. All right, August 14th, 2023 for Nvidia. Quite the manic day. Let's see if this will work. There we go. Here we go. And so we're going to see two lines pop up in a second. There we are. So the calls are in green and puts are in red. And so the green line represents call buying and call selling, and then the red line represents put buying and put selling. And this happens in real time. Anytime you're on the site when the market's open, you'll see this live for any stock, and you can watch in real time how options are front-running price action. Essentially, you can see how the green line is going up and the red line is going down at the same time. Calls being purchased is typically a bullish thing. And puts being sold is a bullish thing as well. So when both of them are happening at the same time, you get this compounding effect taking place on the dealer side because they're hedging now in a bullish manner for both directions. But then on top of that, people stockpiling in, and you start to have gamma ramp up. And when gamma ramps up, delta hedging becomes more volatile, which means that the amount of shares being bought and sold will increase with it. But eventually, dealers will find themselves in a short gamma situation on the call side. And when you're short gamma as a dealer, you end up having to trade with the stock. So if the stock is going up naturally and you're short gamma on the call side, then you will be buying shares on the way up. In other words, if dealers are short gamma on the call side, they will be buying the rip and selling the dip. So it becomes a feedback loop. And you can even watch in real time as people are getting pushed out of their put positions. You're seeing puts being sold now, and that just adds to the move. We opened on August 14th at 402. We're now up to pushing 420. And this is a feature called Flux, by the way. This is the hallmark of OnlyFlows. Now we see some calls being dumped. And it's probably just somebody taking profit. Excuse me. But we're starting to see price, retest this region, and we see people jumping back in. Puts are still being sold, Now people are trying to jump into puts. You see the puts trying to get some steam, but now the price goes up and they're going to capitulate, and you're going to see this red line go down again. I'm sure of it. All day, just steady decline of put selling, and then right here, you see call buying kind of taking a breather, and we see people selling into this move up. And there's that huge influx of call buying. Put selling along with it. Somebody dumped some calls. But I imagine we're going to see this thing go up even more. More put selling. Now bulls are a little wary here. And obviously this is a big range. You don't want to lose this range if you're a bull on this day. Put buyers trying to step in. A lot of call selling. Yep, calls being dumped. And let's see if there's any more of a reaction. I'm not sure why that gap just happened. Oh, there we go. Interesting. Adam Aaron is on Feet Finder. I can't wait to use mugshot lookup for him. Yeah, so just constant what do you call it? Constant upward motion, and you see that before the price increases, you see the aggression of the call side increase. Especially right here. We're seeing calls really step in. And we're close to pushing 430 on this. All right, so calls dumped. We're seeing a little retracement. And we're going into 11 a.m. of August 14th. Carvana cup and handle. Check it out in a second. We had an alert go off for Carvana. I'm gonna pause this. Let's see what Carvana's up to. I think Carvana can go kind of nutty. Yep, that is indeed a cup and handle. That's some big volume on that 10% day. Let's check the weekly though. Weekly's quadruple top. But we are seeing more volume going into the buy side of this than the sell side of the whole thing. Is this the next Nvidia? Who's gonna clip it and ship it? Carvana to 400. We did have an alert though, because I called it out in the Discord. I think it was that? I forget what day that was. I need to rerun these back tests. Oh, why don't we do that now? Yeah, that's a lot of calls. A lot of calls. All right. We're doing a full back test of all of our signals again. Some of these already have back tests to them. $57 call. That was a 0 day that went up to 31% after it was bought. The thing that really fries my bacon is how many people kept pushing a narrative that only helped in the long run. People like Matt Kors. Everybody hates him. Did he use the movement in a way? Yeah, but we all did. And when I say use the movement, I mean we all wanted the dream of a squeeze to be a thing. And so some of us were more enthusiastic about that, and with that enthusiasm came complicity. But I think if you were to rank everybody as far as YouTubers go of complicity, I think Matt Kors is towards the bottom of that list. And I think I also find myself there. There are still people making videos about AMC, still making videos like it's, July of 2021, fresh after the big move to 72. And it's just not going to happen. And there was a chance, and then that 50% short interest dropped 70% overnight because Adam Aaron gave the shorts their exit liquidity at 67 cents a share. Absolutely unreal. That was the chance. And then he didn't even give retail the opportunity. Retail voted no to dilution 2 or 3 times in a row. And what'd he do? He found a little unused what was it? It was a 10-year-old unused clause that AMC had amended that allowed for issuance of an additional $50 million in shares. Not as common stock, but as preferred. And so with that clause that was unused, he decided, and the board decided, to come up with Ape. And by making Ape a 10-to-1 reverse split, he actually ended up just selling everybody's voting rights to Antara. And then giving 80% of the vote to them. And it's within their interest for that vote to pass. And long story long, our beloved retail investors, we are trying to march forward from the pandemic 2.5 years later. And because of the impending doom of bankruptcy, because we're an over-leveraged movie theater chain that can't make a profit to save its life, literally, we have to raise additional capital to pay off maturing debt. Cool. So we get to vote, right? Oh, yes, of course. Okay. So that means that we can say no. Of course. Meanwhile, who gets 80% of the votes? The same party who has a financial interest to make sure that the vote goes through. Even if all of retail said no, it wouldn't matter. And this whole time, you ask anybody that participated in that, anybody who's followed the stock, anyone who isn't someone that has the time like me or someone else who covers this kind of stuff, they don't know the difference. And you want to see something funny? Here's something funny. I was curious. I wanted to know, because I still listen to those calls. I still listen to the earnings calls. And I noticed that Adam Aaron kept saying the word pandemic. And it felt like every earnings call, he would only mention it more, despite the fact that the pandemic has been over for quite some time. And so I got to thinking, and I thought to myself, well, I'm not going to go listen to all those earnings calls. God, I'd shoot myself. I'd start a shotgun if I had to do that. There's got to be a better way to do this. And that's when Scripty was born. Scripty is a module on OnlyFlows. $4.99 a month, by the way. Cheaper than a Netflix subscription. Options, dark pool data, and other cool knickknacks. And I wanted a visual representation of how many times he said the word pandemic. Adam Aron became CEO in 2016. So we're going to set the start year to that. This is how many times Adam Aron has used the word pandemic. In Q4 of 2020, when the pandemic started, pandemic was used 12 times in the earnings call. The following earnings call was used once. Everything after that, it only went up. Now, what's funny is that when he started to pitch Ape, pandemic is in purple, Ape is now in green. Q4 of 2022. Not only did the mentioning of Ape go up in the sense of addressing people, not the ticker, but just our beloved apes. You know, we'll throw that in there too. We'll make it plural just to emphasize. We'll throw in retail as well. Investors. So we'll go through these one by one. So pandemic is in this purple. Okay. Ape is in pink, which might be a little hard to see. And now here's apes, plural. And then retail, investor, investors. What you're going to see is that just investor alone, Q2 of 2022, all-time high. Investors, Q2, all-time high. Retail, Q4 of 2022, all-time high. Pandemic. You see, Adam Aron never even used the word retail more than once. Even after retail saved them initially, he didn't start using the word retail until Q4 of 2022. Coincidentally, the same time that the word pandemic started to see its uprise in usage. To add insult to injury, let's add the word debt and capital. So now the colors got rearranged again, so I'll name them off as we go through them. Pandemic is in stinky brown. Now let's look at the word debt. If you don't know esoteric statistics, this might not hit you at first. And of course, everyone has their own interpretation of things. What strikes me in a really odd way is that when was Ape introduced? That was Q2 of 2022, right? That's when the idea for it came about. Wow, that's amazing. Thank you. Always remember the release week of Ape in the UK. My shares didn't clear for a number of days. I just had to sit there, watch the price free fall. Yeah, don't even get me started. I think it was Q2, either Q2 or Q3 of 2022. Anywho, what you'll see is that the usage of the words retail, ape, apes, investors, retail investors, shareholder, I'll add that, share the same amount of frequency, not one-to-one, not as in, if the word pandemic is used 10 times, then investors is used 10 times, but in the sense that the presence of them is very closely tied together. Almost as if when somebody's trying to ask you to do something that they know you don't want to do, They'll use your name. They'll tell you how much they love you, how much they appreciate you. But if you could just do this thing that no one really wants to do, and quite frankly, you're at the bottom of the totem pole. So I love you a lot, and you're going to do this, Mr. or Mrs. whoever. Now, Mr. or Mrs. whoever, we know how hard you work and how much you care about this company and your family here. But we just had to talk to you about, we understand that, you know, your mother's sick and you've had to use some PTO to attend to her, and we just can't afford that. And if you like this company and you love this company, you will make sure that you don't waste any more company time, okay, Mr. or Mrs.? It's almost in that tone of voice, almost in that vein of coercion, that you see the addressing of retail and apes in confluence of pandemic, and in confluence of bankruptcy, and confluence of debt. It seems like the only time that these things are brought up is when pandering to retail is the only option. I'm gonna redo the colors here just because none of these are unique. Okay. So pandemic is in black, and here's the word debt. Now, of course, you would expect pandemic and debt to have some overlap, but not this much overlap. Investors, shareholder, that's a funny one, isn't it? Shareholder to ape. Look at that. So only when pandemic. So only when mentioning the pandemic and only when mentioning retail, or in this case, shareholder, do you find that those two things occur at the frequency they do. What I'm saying is Adam Aaron has been, I hate this word, but I'm going to use it, gaslighting. Gaslighting retail into this fictitious scenario where AMC goes under, not because of poor fundamentals, not because it's a highly over-levered business model, not because they failed to produce any form of profit because their margins are too high, not because of the stupid debt that they've taken on and that they've diluted their shareholders into oblivion. Adam Aaron walks away with $70 million in his pocket from selling his own equity. All this, the CFO, who's the other? There's a lady that's up there with him. I can't remember her name. All these management figures are walking away with these 7-figure, 8-figure deals. All while they're telling retail, "Hey, we have your interest in mind. We're the we have a vested interest." The fuck you do. Adam Aaron, after making $70 million and giving 2 of his sons either $20 million or $40 million of it, he gifted shares to his kids, which good for you. I don't have a problem with a father taking care of his son. What I do have a problem with is when you use company, what do you call that? Clauses, for lack of a better word, to mandate these additional shares to then gift to your children, to then sell at all-time highs. All while you're telling your retail shareholder base that it's in your interest to make sure that the share price goes up, right? And then the icing on the cake, it was, I think 6 months ago or 3 months ago, there was a tweet he put out that says, just to show how committed I am to our shareholder base, I have I cannot believe this is real. He says, I have, out of my own, I'm paraphrasing, out of the love of my own heart and out of the courage and the integrity of my own self, have voted myself as to not be eligible for additional payment or what was the word? He's saying that he's such a good man that he will not allow his pay to go up. after selling $70 million in equity. This is gaslighting. This is fraud. I'm ashamed of myself for ever even joining into this. I wish I was louder about how messed up this is. I wish I was louder about how it makes no sense that for as much as you talk about how great your company is and how much you appreciate your shareholder base, that you still do not purchase stock in your own company. I'm ashamed that I ever got anywhere near this. This is fraud. You only address your retail shareholder base when you're mentioning a fictitious pandemic that you're then piggybacking off of. We have to raise additional capital. Give me a break. Give me a break. Vile Kyle, what up, man? Awesome chat, gaslighting, yes. Yeah. The same passion I had for trying to find the corruption in this, I have for wanting to see Adam Aaron behind bars. Disgusting. All right, Carvana. I think these back tests are done. Yeah, so these this was on Monday. Somebody bought $100 calls on Carvana. 3 days after this went up 57%. I'll zoom in a little bit. These puts, I think, were sold, and so our back tests are obviously showing the opposite. So if somebody sold these short, in which case, instead of being down 95%, if you sold it short, you're up 95%. Carvana calls, this was also Monday, went up 109% after. $51 calls, this was all one split order. 112%, 61% on these. These calls came in after the move, so I'm guessing that people are looking for more upside. These Carvana calls, $50 strike, 17 days to expiration, 103% 3 days after. 75% right here. 80% down here at the 53 strike. Also, we have insider trade data. So insider buying and selling, of course, and you can filter for specific ticker, what the minimum amount of money involved for the transaction was. You can filter by the date, all that good stuff. Yeah, tons of cool stuff. I guess I'll try to switch gears. Where do you see Apple going? I have a bad feeling the new iPhone sales are going to fall very flat for this cycle. What are your thoughts? So with Apple being, they changed the allocations recently for SPX. It used to be 7.5%, and I think now it's like 5.8%. But nonetheless, that's still huge. Like the biggest index, over 5% of it is in one stock. Why does that matter? even if Apple declines, even if it's 5.8% of the S&P, whatever it might be, Apple being the highest market cap company is something to consider, first of all. That sets a huge precedent. When people see that decline, it affects a lot of stuff. On the same token, though, people will see that as opportunity to reallocate into something else. I don't know if anyone will ever overtake Apple as the number one market cap stock in the market, at least on our public exchanges. But what I do know is that companies like Microsoft, companies like Amazon, companies like Google, companies like Tesla, even that kind of falls outside of the value spectrum, but you'll start to see some money roll into those instead. And though they're not Apple, Microsoft is 4.4%, 4.4% of the S&P. Google is somewhere in the threes. Amazon, I think, is also in the threes. And so even though you're seeing, a really big company decline, that doesn't mean that that money is now just sitting on the sidelines. So you might actually see, 10% of a really big thing now be put into 3%, 3%, 3% of some very closely sized things as well, which would actually probably send the market higher if that's your only lens of looking through things. And with market sentiment, it might startle the overall markets for a week or a couple days, but then you're going to see the buy the dip thing kick in, and you're going to start to see other names start to claim some market share. But to answer your question of where I see it going, on the daily, that is a double bottom ish. I mean, you'd still maybe want to see a retracement down to 172 to confirm that. But it looks like we're rejecting off of here. So this high from August of 2022. So that's a 52-week reference point almost. Still, yeah, rejected from that. And that was a lot of sell volume, but it's still holding up. So you could just see a gradual decline. Where is this? I can never find this thing. Path, there we go. You might see some action like that. If it falls through, not good. You're not finding any form of relief until about 164. 170 would be your real test. If it falls through that, it's 164. Currently, that would be a 5% drop, 6% drop. 5.5. We'll call it 5 for easy numbers. It's a $2.5 trillion company right now, I think. 2.7. So you're looking at a couple $100 billion evaporate, if I have my numbers right. Just over $100 billion. And that's a lot of money. That's a lot of money. Option-wise, it's actually, we'll pull up the signals too. That might, actually no, we'll do one better. We'll use Hot Zone for this. So we're assuming that like the window for OpEx, the rolling of everything and the repositioning of everything, I'm assuming that it occurred um, prematurely. So instead of just this Friday, everything happening all at once, I'm assuming that it started the Friday beforehand. That you would really start to see people trying to maneuver before the chaos of being a institution. So we're pulling all of those trades that are sweeps. And real quick, sweep orders are a really important thing. Excuse me. They apply to options and stocks, but especially in the options world, because you're deriving sentiment from metadata to the transaction. So if the price of the contract is executing at the bid or at the ask, if it's at the ask, you can assume that someone is actively buying. Right? There's still always a buyer and a seller, but you can maybe 60 to 75% of the time determine that if the price is occurring at the ask, that there is intent to buy, which would mean that that is a actively sought after position. There is anticipation of things going in that direction. When it's at the bid, you're assuming that it's sold, which means that someone is actively trying to open a short position against that contract. Sweep orders are really interesting because when somebody has a bunch of aggression to get a particular position, when you're dealing with big money, you don't have time to wait to get into positions sometimes. You know that the moment that you show your hand, you put in an order for $250,000, someone has systems waiting to see that, and then they're gonna either work against you or they're gonna try to push the volatility surface around it up so that you're paying higher for it. And sometimes you just want to get in and get out, or sometimes you want to just get in. And so with sweep orders, what happens is the order is so big that one exchange doesn't have enough to sell to fulfill that order. So what a market maker will do, or what a dealer will do, is if I'm a bank and I want 10,000 contracts of Apple at the 160 put, instead of me submitting my order just to the open market, I can submit it to a prime broker, a dealer, and they'll take that order and they'll actually submit that order so it pulls you're purchasing contracts from multiple exchanges at the same time. And so a sweep order is taking one giant order and pulling it from multiple exchanges. It is the most telegraphing order that you can do as somebody who's participating in options. It's basically saying, hey, I'm doing this. Look at me. Take my money. So sweeps are so indicative of what someone's intending to do. Now the misconception though is everybody thinks that sweep orders are exclusively buy side, which is not true. Sweep orders can take place on the sell side as well. So if I have a bunch of inventory I want to get rid of, I can actually have that marked as a sweep order. And so I'll flood the exchanges with supply. And so what we've done is we've taken Apple, and going back to when we're assuming that the witching or the rolling or the re-inventorying process began prematurely. And so these are the most active contracts that are only sweep orders and that are only out of the money that were worth at least $100,000 or more. And so we see some 175 puts that are the highest for order premium for the October 20th expiration. 7 trades, $2 million total, and about 6,200 contracts. And if we pull up the chart of the contract, we can see in a second how much of that is buying and selling. So this is the 1 month, and we see that there was a lot of selling here, a lot of selling here, a lot of selling, big open interest drop. So we can probably assume that that is a short position. And then checking the 3 month. Yeah, so somebody went short the 170 puts August 16th. I guarantee you Apple went up at or near August 16th. Where's the vertical line? So August 16th is this white line. Right here. Right? I didn't even know what the chart looked like as far as Apple went. And I can definitively say, yeah, that went up. After it reached its local bottom, it ascended 10%. I just lost it. Where did it go? I hate these load times. These drive me insane. Yeah, and then you saw the open interest goes up, which is pretty indicative of, that's like the most confirming thing to someone going short. And that's targeted for the 1020 expiration. Checking the weekly of this. More selling, so that could push Apple higher. Somebody opened up 3,000 for the 2024 March 15th. And that was opening. So somebody bought 3,000 contracts at the 155 strike for March 15th of 2024. What are we on at the moment? Oh, this is Only Flows. OnlyFlows.app, baby. Go get you some. And it's made by your boy. Yeah, price goes up soon, by the way. So even if you don't plan on using it, just go buy it, because the price is going to go up like 5 times sometime very soon. There's also lifetime memberships, which I will be pulling very soon as well. I'm at ticker. Oh, fuck. Hey, what up, dude? This is Apple. But still, make another account, buy it again. Do it. So there was an opening position for March 15th. One giant trade, 3,000 in size. Then we also see some 185 calls for October 20th. No, lifetime. Hold on. You have the 1 year. This is the lifetime. Feeling frisky? Go in. YOLO it. Go in. 2K. Listen. Average credit card APR right now is like 13.5%. By maturity, you'll probably be paying like $5,000, but that's okay. $5,000 over 3 years for a lifetime of Only Flows greatness. Do it! We're back. Let's see. It looks bullish, based off of what I'm seeing. Yeah, these 190 calls were opened for the January 17th, 2025. If these 165 puts are short, it's bullish. Midpoint. How about these 175s? I want to say bullish. If these 200 calls are bought, we're bullish. That's bullish. Yeah. I think Apple's set to go up. I personally believe the markets are going to go up for the foreseeable future, just in general. Has me really surprised. Yeah, me too. Kind of. Microdosing and trading is the way forward. Apparently, that along with your app makes me money. Salute, salute. Mm. Yeah, I think it's bullish. Yeah, that's bullish. People have just been buying up calls down here. Hope you're well, brother. I'm at work, so trying to listen, but you're looking healthy again. Love the education. Start shimming. Hey, thank you, man. Thank you. We're trying. We're out here. We're fucking doing it. Only flows is the mark of this channel being reborn. So the closer this thing gets to being up on its own feet, the more Papa will be around. Yeah, old Reverend Rippy. Hallelujah. Good times. Yeah, lots of call buying. Put selling and call selling right now. This goes back to July 1st. But the momentum is curling around down here. It's out of sync because I'm messing with the zoom and I don't have these all interlinked. But let's see. Yeah, lots of put selling. And you can see back here, August 14th, you saw a huge sell-off. We just looked at that earlier, of puts being sold. That was those 18K sell order. This one, the white line. This was August 16th, and this giant decline was August 16th too. So you can see how selling of puts has a bullish effect on things. But call selling has taken place too. It's just been a gradual decline. Calls are being sold into this move, and so depending on the gamma exposure to that, which I'm working on, it might be at a neutral point where customers will be long gamma and delta again. All right, I'm gonna call it here and probably take a nap. Thank you everybody for coming out. Not bad for a first stream back. Yo, Jacob, my man. Thank you, dude. Hopefully, hopefully we'll be consistent this time around. If you want to support the channel, don't subscribe to the channel. Subscribe to OnlyFlows. This is my baby. This has been my life for almost a year straight now. So the more traction this gains, the more I'll be around on YouTube and Discord and all of that. So yeah, that's the one thing I ask for. If you're looking to support, if you want to, here is the link. Go there. And have plenty of guide and tutorial videos on the way as well for this. Alrighty. Yeah, thank you everybody for coming out. Might be back on later tonight. I'm not sure. Slim chance, but there is a chance. Follow me on Twitter at ThatGuyAstro. And what am I doing? Yeah. I'll see y'all in the next one. Cheers.